As opposed to being quarantined today, I figured we should go for a little bit of a stroll and see where that takes us. Anyway, Warren Buffett had his annual Berkshire shareholder meeting where he did a lot of talking this past weekend, and it was pretty revealing. So I want to talk a little bit about that this video. Let's get into it. I was watching a little bit of the shareholder meeting with Warren Buffett this past weekend. He got some questions that were more or less irrelevant towards him. Like, people were asking him about why credit card interest rates were so high. And his response was, he doesn't know these things. But he gave a lot of revealing talk about how he was positioning himself and what he was doing, what he was buying, what he was selling. I think a lot of the market thought that Warren Buffett would be quietly accumulating. Not only did he not accumulate, but he raised more cash. He actually sold off his airline stake. This could have been a strategy. Basically reduce my exposure just enough so I don't completely spook the market if I were to liquidate everything, and then just basically slowly sell off my airline stocks completely. Personally, I don't think that's a bad approach. Warren did a lot of talking about don't bet against America, and he did feel like we're going to be coming out of this. He was pretty optimistic with his words. It does not seem as if he's that optimistic with his money. I'm of the opinion his actions were actually very bearish. You don't have to bet against the market to be bearish. You basically just don't have to put your money in. If you don't put your money in, you're bearish. So someone like Warren Buffett, who's holding almost 120 some billion in cash, if not more, I think it's over 100, it's close to 140 now. He's actually positioned very bearish and he's not really taking action. To me, that's very revealing because he's like a big time whale. A lot of major hedge fund players like Bill Ackman were actually talking on CNBC how he's probably secretly buying. And then when he's already made all these transactions, he'll probably let the market know that, hey, now's a good time to buy. But that really wasn't the case this time around. It's true the market fell 34%, but it didn't fall that low for a very long period of time. Someone like Warren is not really a trader, and he doesn't really sit by a computer and wait to just buy stock when it drops like that. This type of bear market doesn't really suit him. But the fact that not only did he not buy during this time, but he actually started selling like his airline stocks and a few other things, and he's holding on to more cash than before, really goes to show you that he doesn't feel like it's an investable market right now. Just because the price of something falls 50%, doesn't necessarily make it investable, because the entire environment around it could be different. Its entire business can be different. That's exactly what happened with the airlines, the fact that he liquidated it. What's pretty interesting to me is I feel like Berkshire's underlying business model is not applicable in today's government policies. In 2008, 2009, or even decades before that, he was able to accumulate so much wealth. Why? Because all companies go through cycles where they start to fail and they need someone with cash and capital to come in, bail them out, and they give them very preferable treatment for that cash. The rumor is that he would always buy stocks on these massive discounts and dips. Yeah, he did stuff like that. That's obviously his business, but a bigger part of Berkshire's business was he injected massive amounts of cash. He was able to provide cash and liquidity directly to the company and in exchange get preferred treatment for that cash and liquidity. With the Federal Reserve coming in to bail everyone out, the government coming in to bail everyone out, what the government's doing right now, they're going to continue to do for every crisis in the future. Not letting companies fail is very anti-capitalistic, because some of these companies did fail to even have a few months worth of liquidity locked up. So someone like Warren Buffett in his past could come in and just buy it up. In today's day and era, it doesn't seem like there are opportunities like that for someone like him to take advantage of. So it might be that in today's era, Berkshire's model is no longer applicable. Anyway, the man's a lot smarter than me, so I'm pretty interested to see the way this plays out, how the markets respond to the fact that they now know what his action is. So pretty exciting week coming up on that alone. It's obvious Warren Buffett, by his actions, is a bear, even though his words sound reasonably optimistic about America's future. The fact that his money is not really on the line over these past few weeks is pretty revealing. This past week, my bearishness has gone up considerably. I don't get short very often. I try to time it very precisely. Trading on the short side is a little bit different than trading on the long side. When you buy stocks and you mistime it and you're off by, let's say, maybe it goes down for a month. And in most markets, eventually stock prices will rise because there are pensions and other companies that want to bid prices up. But when you're betting against the market on the short side, there are times you're going to get squeezed out and lose money and not be in a position to short again. That's kind of the difference between my bearishness level. I really feel like 2,800 is overpriced, at least at this moment. Don't follow in my footsteps because I lose money all the time, but I'm now short the market. Let's go over some trades I did this past week and wrap up this video. I shorted Facebook. I shorted this actually after hours. I didn't gamble on it pre-earnings. I shorted it after hours around $211, a very small position, about 10K. I covered it, made about $300 profit on it. I've shorted Apple twice this week. The first time turned out profitably. I covered it before Google announced earnings, mainly because I was worried Google's earnings were gonna be good, and they were, and it took the price of Apple up with it. I then shorted it the following day after Apple bounced back a little bit from the Google earnings, but the price of Apple is still higher than my short price.
Order filled.
I still haven't covered that short yet. Looking to do that this week. I think the market is gonna fall this week based on Warren Buffett's announcements this weekend. We'll see. And then lastly, I have done some E-mini futures trades. Right now, I'm positioning myself a little bit more on the short side. We'll see how that goes. Hopefully I don't get my face torn off on these. Good luck out there and stay safe. Hey guys, I got Red Rock Casino back there and it's still closed, so I can't gamble, but I can still gamble on the market.
I just want the money, money, money.